Hello, this is Ken Tomko with T2 Asset Management doing our monthly review of what's going on in the markets. As always, please don't use these for trading purposes. They're for information only. I always begin here with a weekly chart of the S&P 500 going back, so 2021 there on the left side. So we're getting, good 5 years on this chart here. You see the nice uptrend that we've had here after the start to 2025 had a really, really bad dip to it, but has since recovered, and we are sitting right now at just a tick shy of all-time highs. It's right there. It boggles the mind. Everybody had kept calling for a recession and saying that the market's overdone, and it is very expensive. But here we go. The charts don't lie. I also put up here some recent stopping points, resistance, or I should say support underneath for the market. That as long as we're holding up above that level, I would say the market's still in just a uptrend. If we come down here to a daily chart, you can see we had a trend line that was going there for several months, and we did break it just a little bit here towards the end of November. However, it came down to highlighted support that we had shown, and what it did was it bounced right off of it and moved on. A little too steep for me to draw another trend line here, but if we just keep the old one and continue this 65.50 as support on the S&P 500, looks like we're still in an uptrend, or at worst, you see we might have a little bit of we've had a sideways pattern here for 3 months. So the market's maybe consolidating, just trying to digest some of these gains that are pretty huge that we've had there since the beginning of April, the rally up. Come down here in a little more detail. This is the 2-hour chart. This gives us the last 6 months or so of trading. You can see here the nice uptrend that we had, and then we broke it, but it just didn't come down to any support level. It didn't really break any support levels there. So now it looks like we either have a sideways or we're just going to continue on upward. So things looking pretty good there. Even though, it got a little interesting there in late November, but it's recovered all of it back. We look at some of the breadth, some of what's going on inside the market. This is the percentage of the S&P that's in an uptrend. I had highlighted our last video that they were, it was quite low. It was down around 50, that there was some cause for concerns, and we did get a little bit of a sell-off there, and it had dropped to 37. But as we're doing this today, it's at 60, so that's improving and certainly in the right direction. The advanced decline line on the New York Stock Exchange, as you can see here, we'd had a long sideways, now seems to be breaking out higher. So market breadth is actually improving right now. If we come down to the volatility index, the VIX, that's the price that people are paying for insurance on their portfolios with options contracts. They can insure it against declines, and right now that is hitting a low here. Again, end of November, we got up to nearly 27 on the VIX, and right now we're hitting back to 15 again, which is the lowest it's been in a few months. So it does look like this rally is continuing for a little bit, even though it certainly skips at people's expectations. That's why we tend to pay attention to the market and what's going on there, rather than just the prognostication. We don't have a crystal ball, but we can tell you what's going on within the markets here. We go down to some of the items that are give us again a little inside look at what's going on in the market. This top one is a ratio of consumer discretionary stocks to consumer staple stocks. And in a healthy market, we would expect people to want riskier stocks, more things that are going to go growth stocks rather than Kansas soup and toothpaste and that sort of thing. As you can see here, maybe a little sideways the last couple months, but still solidly up. No indicator like before the sell-off that we had in February, March, April, before earlier in the year. You can see this was falling off a cliff. That is not happening right here. The next one down is technology stocks relative to utility stocks, and same thing. We would want to see nice uptrend, and earlier in the year when the sell-off came, we saw a decline in this ratio. Same thing with biotech over healthcare stocks. We would expect in a declining market that healthcare stocks are going to do better than biotech stocks. We're not seeing that here. That's on the rise. And finally, the ratio of hotel stocks to utility stocks. The economy starts going bad, market's going down, you're not going to buy hotel stocks, you're going to buy utilities again. And that ratio is rising over the last couple months here. Interest rates. If we come here to the 10-year interest rate on the U.S. Treasury, you can see there that it is solidly flat. As I've been pointing out before, the last few years, it's just staying right around that 4% mark. We certainly go back and forth and get some movements over a quarter or something like that where it's back and forth, but it just has not left this range in years. So not seeing anything that's going to kick the stock market the other direction just yet. Finally, well, not finally, got a couple things to look over, but the indicators here, GDP growth rate, the last print on GDP growth rate was good. Now, keep in mind, because of the government shutdown and all that, some of this data is behind. But that's a good number right there. If we come to inflation rate, same thing, around 3%, really not too overly strong. That's solid. And then finally, I like to look at also retail sales staying above zero, which is fine. They're not incredibly strong, but they're still positive. I highlight nearly every video now. The one thing that is of great concern is that the fact that this market is quite overvalued. If we said the 20 times earnings on the stock market would be 44.50, and what we are looking at right now is 69.01. So this market is definitely, even though earnings are strong, everything's good, economy looks good, at some point things aren't a bargain, and they will come back to those levels again. How long that takes, what the timing is on it, no one knows, but the market is very expensive. So just something to keep an eye on there. Hope, let's see, we'll pop back here. Hope this was informative and helpful. But for right now, the market's still in an uptrend. We're seeing, even though a little slow down there for a couple of weeks, it's right back to it, and we're off to just shy of all-time highs. So hopefully this was informative and helpful. Let's see here. Forgot to put this up before, but I will find it. There we go. There's our contact information if you'd like to hear more about what we're doing for our clients, or if you have questions for any of the upcoming videos, please don't hesitate to ask. Until then, we'll see you at the next update, and thanks for watching.